Well, without further ado, I'd like to go ahead and hop in. I'm Alex. I am with Prosper Insurance. We are an independent agency headquartered out of Virginia Beach, right off of Lynn Haven Road. And I'm here today to talk about homeowners insurance and the information that I'm going to share to you with you today. It's going to help you help your clients, right? It's going to give you some information to look for. When you start looking at these homes with your clients, you're going to be able to identify some things that could affect their homeowners insurance policies. And just as a reminder, homeowners insurance is one of the four payments of a mortgage payment, unless it's a cash offer, right? So homeowners insurance is a really big deal. And we want you to have the tools to be able to help your clients. Okay, hold on one second. All right, so if you look here, on a homeowner's policy, there are some basic coverages on there that are pretty important when a homeowner is looking at their policy. So the dwelling, when you see the dwelling on a homeowner's policy, they're actually talking about the structure itself. So everything that, is the living quarters essentially, right? None of the property inside. We'll get to that in a second, but the actual structure itself. That is typically coverage A. Coverage B is other structures. So other structures are going to be like the detached garage, a detached gazebo, a detached mother-in-law suite, anything that's not attached by a walkway to the main dwelling, the main structure. And that's coverage B. Coverage C is all of the personal property that the client owns. So anything that they're bringing inside the home. If you were to take any house and you shake it up like this and all of the belongings fall out, that is what's considered personal property. Generally, that is not of interest to the mortgage or the lender. Okay, so they're not worried about the personal property. It's just good to know that it is a separate coverage from the dwelling and it should not be factored in to the dwelling amount. Now, coverage D is loss of use. Loss of use is coverage in the event there was a covered peril or a covered loss where the client could not live in the home. So for example, if somebody had a fire that partially took out the house and it needed to be repaired and it was inhabitable, until it was repaired, they would have this coverage amount, which is a percentage of the dwelling amount, to help them live. So it's going to pay for things like their hotel stay, their food, their laundry. Any expense associated with not being able to live in their home is called the loss of use coverage here. And coverage E is going to be the personal liability. Now, the personal liability is coverage in the event, that the client is found legally liable for a covered loss. So let's just say the client has a party and they have a guest that trips and falls off of their deck, and the guest sprains their ankle and gets hurt. Well, likely that client is going to be found liable because they hosted the party at their house, they were serving alcohol, and it was their property that the client got hurt on. So that personal liability coverage is very important, and that's what's going to cover that loss. And it's going to pay for their legal team. It's going to pay for their friends' medical bills. Anything associated with that covered loss, that personal liability coverage is going to kick in. Now, the amount to go from the minimal amount of liability, which is $100,000, we never recommend, is pennies to the dollar, guys. So, I highly encourage, even though you're not licensed to talk insurance, for your own knowledge, you should have $300,000 of liability or more. Okay. So those are just some of the main coverages on a homeowner's policy. Again, dwelling, other structures, personal property, loss of use, and personal liability. I would say for you, for this purpose, you're definitely going to want to just focus in on the dwelling and other structures, because this is what you guys are actually going to go and look at with your client, right? You're going to look at the main home and anything detached from that home, like a garage or other living quarters. All right, so there are a tons of rating factors that affect premium, okay? So things like, you know, if you have a client that's looking at a home that's built in 1902, that's gonna affect the rate, right? Because it's an older home. So the newer the home, the lesser the rate is gonna be. Credit score is also a factor. It used to be several years ago, they didn't used to look at that, but after they did research, they found that people with lower credit scores tend to file more claims. And they have hard numbers to prove that. And so now they look at credit. Zip code. So they look at zip codes. They look at zip codes because they want to see if a certain zip code has more claims than another zip code. So they look at that. Construction. If you have a home with a frame construction, so out of wood, right? The actual frame of the home is built out of wood versus masonry. The masonry home is considered more safe or durable, right? Than the frame. So the masonry is going to get a little bit of a better premium. Any updates that you do. So if they have a newer roof, they can qualify for a new roof update. If they've replaced their HVAC recently, that could be another discount they receive. Your updates are really important. If they've updated their electrical from like the 1940s or 50s, that's important. If they've updated their plumbing, that's important to note. So those are good questions to ask your sellers. You know, when have these things been updated? And that way you can share that information with the buyer, and that will help them with their homeowner's insurance. All right, so the type of foundation is also a rating factor. So, you know, slab versus crawl space versus basement, that can make a difference. The roof type can definitely make a difference. So if you look at a roof with just regular, you know, 30-year shingles versus the regular shingles used to be maximum about 20, 25 years was the lifespan on those. Architectural shingles are anywhere from 30 to 50 years now. So if they have the architectural shingles, those are definitely going to help with premium as well. And things like claims history. So, you know, if you have multiple water claims on your record and, you know, in a 5-year period or a 3-year period rather, there are some companies that do look at 5 years, but they're surchargeable and affect the premium if they're on your record in the last 3 years. So if you have water claims and you know, multiple water claims or multiple any kind of claim, that could hinder your premium. And then another rating factor, they do look at swimming pools, guys. So swimming pools, they see it as a higher liability, so that is going to affect your rate. They will also talk to you about things, how to mitigate those rates to make sure that, you know, you're within the guidelines and all of that. All right, so those are some of your rating factors. So let's talk about possible insurance hazards. So these are things that, you know, you'll be able to identify pretty easily when you're going out to look at these properties. So I will tell you, insurance companies, they do look at the steps and handrails. Some companies are they differ just a little bit, but if you have generally 3 steps or more, you're required to have a handrail. And so when you're going out looking at homes, you're going to be looking for steps with no handrails, right? Because that means the buyer is going to need to get that done to insure the home, very likely. EIFS. I got to get with Sarah on that one. Quest or polybutylene pipes. So there are some neighborhoods, I know in Newport News where I live on my side of the water, where there were like a few neighborhoods that that's all the kind of piping they put in. And a lot of insurance companies refuse to insure homes with this type of piping because of the claims history that they have. They tend to bust and rupture, and it's a very expensive claim. Whether or not you have fuses or not, guys, if you are looking at homes with fuse boxes, that's going to present a problem for the buyer. That is like totally old school. Insurance companies want to see those updated. There is a I want to say there might be a market that is not an admitted market, which means they don't have a certificate to do insurance in Virginia to write these homes, but they're more expensive. And like I said, it's a very small market for these homes that have fuse boxes still. All right, another thing that, you know, they look at are vicious dogs. So I will tell you, pit bulls are across the board considered a vicious dog. There are some companies that do consider German Shepherds. Not all companies, but a lot of companies. There are some companies that consider Rottweilers vicious dogs, Chow Chows as vicious dog breeds. So definitely, you know, just kind of keep your eye out for that. Another thing that poses, you know, could pose a hazard to the home or the buyer is the distance to water, obviously, right? So we all know that homeowners insurance does not cover flood, and the closer it is to the water, obviously, there's a higher risk for flooding. Diving boards, slides, and trampolines. The insurance companies are pretty strict when they look at these items. If the insurance company says, yes, you can have a diving board, there's going to be some strict guidelines. They're going to want to know if they have an anti-skid pad on top of the diving board. They're going to want to know how high the diving board is. Lots of perimeters there if there is an existing diving board. There are a couple of insurance companies that do allow for slides, but very few. And trampolines, there are definitely some guidelines along trampolines. There are many insurance companies that do shy away from them because of the history when it comes to claims. A lot of people have gotten hurt on trampolines and are seen as a huge hazard. So when I used to sell insurance, I used to say, you know, if the kids are older now, just get rid of the thing because it's just too much of a liability for the client. Aged roofs, lack of updates, and flat roofs. So, you know, you have an old roof, a flat roof, or they haven't repaired it or updated it. You know, what do you think is going to happen? What kind of claim do you think is likely to happen? Probably a water claim, right? Because if it's an old roof, there's just more of a chance that the rain is going to fall through, so, or do some damage, water damage. Asbestos siding, I'm sure that does not come to a surprise. There are still some homes with asbestos siding. So if they have that, that is gonna, you know, that is a hazard, as we all know. Any properties that have overhanging limbs, especially, you know, in Virginia, we have a plethora of trees, right? So that does create a hazard for the home. The insurance companies will go out there, and if they see that, you know, that's a phone call or a letter saying, hey, we need you to cut these limbs down, because they see it as a hazard that the limb will come down on the home and damage the home. So it would be good if you guys can request, hey, you know, to tell your seller, maybe cut these limbs down for us. So you can ask for that in your negotiations. Cracked driveways. Yeah, so you know, when sometimes you're walking up on the driveway and the tree root has grown so far and up, it starts to lift up the driveway. That's a tripping hazard, or a crack in the driveway is a tripping hazard. Insurance companies can go out and see that and can ask the insured that, you know, they have to repair or replace, and that's a very costly repair or replacement. So that's something else to look at. And another hazard that they look at are sheds. So, you know, I know we've all seen those sheds that are barely hanging on. They're hanging on for dear life. You're you're even scared to go inside of them. They look so creepy and old and raggedy and everything. So if they see a shed like that, they're going to go out, and the insurance company is likely going to say, hey, again, another letter saying, hey, you need to either remove the shed or replace it, remove and replace. So these are just headaches that can be avoided if, you know, we just have our eyes out for these. Okay. So things to save your buyers money, right? Because we want to save our buyers as much money as possible. They're coming to the, you know, they're already spending all this money on closing costs. You know, the last thing they need to come out of pocket for is, again, for insurance purposes. So again, if they have architectural roofs or wind resistant shingles, that's going to help them save money. If the home has hurricane shutters and impact resistance glass, that's going to save them money. Generators will save them money, because just think, if you have a storm, a lightning storm, and you lose power, that means that if they have a generator, it's likely going to turn on the refrigerator, which is going to save the food, which could be a potential claim. So generators do help with rates. General home maintenance. So it's really important to point out that homeowners insurance is not a maintenance policy, right? So the homeowners insurance policies and the companies, you know, they're designed to, you know, insure spontaneous losses. Okay, so things like fires, you know, a water pipe rupture, things that we're not expecting, not regular maintenance where you're not keeping up with the home. So when you keep up with the home, you know, you do get better rates. Renovations, that could help you save some money. And if you remove insurance hazards, so that list that we just went over of insurance hazards, things like diving boards, inferior finishings, you know, like paint with lead or asbestos sidings. When you start to eliminate some of those hazards, you're going to get better rates. And any kind of liability hazard. So like that driveway that you could trip over, that hanging limb that could potentially fall on somebody or the home. Those things will also save you money. Okay, real quick, this is not a flood CE credit class, but it is worth mentioning again that homeowners insurance does not does not include flood. And the last thing that you ever want to tell your clients is that you don't need flood insurance. So it is important to make mention that homeowners insurance does not include flood insurance, okay? The client, whether or not they're in a low risk zone or a high risk zone, has the option to purchase. Obviously, if they're getting a loan and they're in a high risk zone, the mortgagee is going to require flood insurance to cover their investment, right? But if they're not in a high risk zone, the zones are typically, as you read them on the certificates, are X, B, and C. They can still get a very inexpensive annual flood policy through a private market or even FEMA. The high risk zones are generally labeled as A and V on the elevation certificates, again, likely required by the mortgage companies in order to close the deal. And if you look at the notes there, the high risk areas have at least a 1% annual chance of flooding, which equates to a 26% chance of flooding over the life of a 30-year mortgage. All homeowners in these areas with mortgages from federally regulated or insured lenders are required to buy flood insurance. All right, and flood hazard area. So we all live in a pretty large flood zone area. So they generally are, you know, the coastal and low-lying areas that typically need flood insurance. One question I would ask if they are in a flood zone is there an elevation certificate available? I'm sure you guys have already run into that multiple times. I have been getting a couple of phone calls where they're not in this area, they're in another area of Virginia, There are not a lot of flood areas, but there are a few near some rivers, and they're not familiar with it. And what they're not asking off the jump is, hey, is there an elevation certificate? That could save your buyer money and the need of having to come out of pocket $300 to $500 for an elevation certificate. So ask the seller if they have an elevation certificate if they are in a high risk flood zone. So just a couple of things on the flood, again, because it's worth mentioning. So the base flood is, if you ever come across this, or these definitions come across, you kind of have an idea of what they mean. So, but base flood is the flood, that means the flood has a 1% chance of being equaled or exceeded in any given year. This is a regulatory standard, also referred to as the 100-year flood. So they're saying there's a 1% chance in any given year that this area can have a flood. The base elevation is the computed elevation to which flood water is anticipated to rise during the base flood. So if you look at an elevation certificate, let's just say your seller has an elevation certificate, you're going to see the base flood elevation. It's normally a number. The average here in our area is 8. And what they're saying is that the flood water, that's the maximum that they're anticipating the flood waters to touch. Now, obviously that's going to differ from property to property, but generally speaking, that's what they're looking at in our area is the 8. Anything below, if those numbers are below that, the premium is likely to be a little higher than the person that's at 8 or higher, okay? And then the adjacent grade is the highest natural elevation of the ground prior to the construction next to the proposed walls of the structure. So those are just a little bit, that's just a little tidbit on flood. We do a flood CE credit class that my colleague Sarah, I'm sure has taught you and will be teaching again. If you have any questions regarding anything that we covered today, I highly recommend you reaching out to my colleague Sarah Dodson. Here's a couple of also, there's some resources here for the flood. And I definitely want to open it up now for questions. I'm going to go ahead and stop sharing.
I don't know if maybe I missed it. What is the elevation certificate for?
So that is for properties. So the elevation certificate, it gives you hard numbers as to where how high the property sits in comparison to the flood elevation. So those are for homes, especially. You can get them for any property, but you definitely want one for a property that is that's in a high flood zone. So if you have someone really near the coast, you're likely going to need a flood elevation certificate. Those numbers on the flood elevation certificate help us rate and quote with FEMA to get a flood policy. And they affect the rate. The numbers that are on that elevation certificate affect the rate. And your buyer will not be able to close on their home if they do not have flood insurance and that property is in a high flood zone. So the elevation certificate will help the entire process. Could potentially also save them money.
Okay, thank you.
Sure, thank you. Anybody else? Any questions? Okay, I'm gonna just ask a couple of questions. You might get a prize if you get it right. So can somebody name 3 rating factors that affect, 3 things that affect the rate?
Dwelling, other structure, personal property, loss of use and personal liability.
Okay, that is actually the different coverages on the homeowner's policy. You were
Oh, yeah.
right, you're right on track. Does anybody else want to take a shot? 3 things that affect your rate, that can affect your rate.
Diving board, trampoline, and asbestos siding.
I was looking at the.
Okay, those are hazards. So I'm going to give you that because it is essentially the same thing, right? They all are going to affect your rates, but those are your hazards. Very good. And then Miranda, I'm going to give you the dwelling coverages or the coverage question that I did not get to because you literally named every one of them. So that is awesome. So another question, which 2 dog breeds did I mention that are going to be likely seen as a vicious dog breed that could affect your premium or your insurance?
Pit bull, German Shepherd,
Shepherds,
Okay.
Chow
Awesome.
Chows.
Chow Chow.
Yep. Very good. All right. And then my next question is, what kind of roof can save your client money?
Architectural.
That's right, Miranda. Yes. Very good. And let's see. Which flood zone are you likely going to need a flood policy for?
Flood zone
A and B.
Very good.
Oh, yeah, A and B.
Dang, you guys were listening. It's awesome. Okay, and last question is what kind of electrical system do insurance companies shy away from and want you to replace?
Fuses. Fuse box.
Yes, very good, very good. All right, guys. Well, for those of you, Christine, I see you participated too, honey. Kimberly, I see the chat as well. All right, for those that participated, you guys will be receiving a little something from Prosper Insurance. I thank you so much for your time. We are a little bit earlier than an hour, and I hope you have found some value. If you have any additional questions, reach out to Sarah, my colleague with Prosper, or you can reach out to Thomasina and she'll get with us. Sound good?
Sounds great.
Thank you.
All right. You're most welcome. You all have a wonderful day. Thank you guys. Take care.
You too as well.
Bye, honey.